When we launch a hedge fund, we generally form three entities. We use a Delaware limited partnership for the fund, we use a limited liability company for the general partner of that fund, and we use another limited liability company for the investment manager or trading advisor to the fund. We create the limited liability company operating agreements, we get the tax ID numbers, we form the entities. The two limited liability companies are the operating companies. They're owned by the managers of the fund. The considerations for the limited liability companies and for the managers operating them will be whether or not they are required to register as investment advisors, either at the federal level or the state level, or register as commodity pool operators with the Commodity Futures Trading Commission and become a member of the National Futures Association. This will depend upon whether or not the fund is trading commodities, futures, or securities. Other considerations may be relevant depending on whether the underlying investment activity of the fund concerns physicals or other objects that could be traded for or invested in by the fund. So, for example, real estate might be an investment opportunity that the fund would be concerned with. We do the registrations. If the fund is required to be registered as an investment advisor, we will do the registration either at the SEC level or at the state level. In most instances, we start out with a state registered investment advisor where required, unless there is an appropriate exemption from registration. We will also do the registration with the Commodity Futures Trading Commission and membership with the National Futures Association if that is required of the fund to operate as a commodity pool.